Yeah, so guys, this trade wasn't about indicators or luck or anything. This was about where liquidity was resting and how price had to take it. You see, most traders lost money because they failed to understand the concept of liquidity, how liquidity is being utilized in order to make a very good decision in markets, to make a very good decision before taking trade. Now, at the end of this video, you will understand how liquidity actually moves price and how I used it to enter this particular trade on GBP USD. I'm not here to teach you a setup. I'm teaching you a way of seeing the market, how you will see the market very clearly. You will understand every candle in the market, all language of the candlestick in the market. You will understand everything. If you are joining us for the first time, you're welcome. My name is Michael, the self-led strategic trader. Now, sometimes you see breakouts in the market, sometimes you see different stop hunts happening to you. I can tell you authoritatively that this is because you don't understand the concept of liquidity. Now, one of the things that will make you to know if you are disciplined or not is if you try to skip this video. That means you are not disciplined as a trader. See, I'm not trying to psych you, I'm just telling you the real truth, because this is the tutorial that is going to change the way you see the market. Don't forget the things we look out for when we want to take our trade, as I always mention on this platform. The first thing you check is the structure of the market. Write this down. The number one thing you have to check is the structure of the market. The structure of the market. Who is dominating the market? Is it the buyer? Is it the buyers or the sellers? Now, if the buyers are the one controlling the market, you have to know the time the sellers are trying to take back the market from the buyers. And if the sellers are the one taking positions, you have to check the time when buyers are trying to take position or take over from the sellers. And these are the stages we call the pullback stages. We are going to be staying on the 1 hour time frame. And the first thing we want to identify here is the structure of the market. So I'm not going to waste our time. I'm going to just keep straight to where the markets change. Now, so we are going to check here from this place to this place. This is a what? This is a low. This is a downtrend. From here to here is a downtrend. Is a downtrend. So we can say this is the high. So we can say this is the high, and that high produced this low. That high produced this low. So we had a pullback, and the pullback. So this high produced this low on the downtrend. Then we had the pullback here. This pullback produced this low. So if market failed to break above this level, that means we are still on a downtrend. So this pullback, this is the time the buyers are trying to take over the market, but they couldn't take over the market. So the sellers took control again, and we add this low. So we say this high right here, the highest point of the candle right here, produced this low, produced this low, produced this low. The low you are seeing right here. So we can now say we are still on the downtrend. Now, this particular low, pay attention here, pay a close attention. The low here, the new low here at a what? At a high, at a high. So the new low here at this high, and this high at this low. And this high at this low. So we can see this is higher high, higher low. So sorry, this is lower high because it's a downtrend. So this is lower high. Mind you, this is lower high. This is lower high because it's a downtrend. This is lower high, lower low, lower high, and a lower low. So this low here had this high, and this high here had this low. Now we can see that the buyers are trying to take over. They have been trying to take over from this level. They couldn't. They tried here. They couldn't. And if you pay attention now, I want you to listen to this. When market is going to change direction, the volume at which the market moves is going to reduce. Write it down, please. When markets want to change direction, the volume at which market moves reduces. We can see the kind of trend, we can see the kind of volatility we had in this downward movement. Price tried to retrace, the buyer tried to retrace, then the sellers took over again. Then look at this level, between this level and this level, price movement was very low, before it came down to this level. And what happened afterwards? We had buyers taking control. They took control here. So now that the buyers have taken control, as you can see here, this is a break in market structure. This is a higher high right here. All right, guys. So we can see the lower highs, lower low. Price came lower highs, lower lows. Now, I want you to pay attention to this because you have to know how to mark your market structure very well and accurately. This level was a lower high before because it produced this lower low. But immediately price closed above it, it became a higher high, which became the start of the bullish structure. It became the start of the bullish structure. Now we had this movement upward, higher highs, higher lows. Then from this low, we have market going aggressively. So after identifying our structure, the next thing we want to identify is our liquidity levels. Number two, liquidity levels. We have different types of liquidity. We have previous year high and low. We have previous month high and low. We have previous week high and low, and we have previous day high and low. We have previous section. Now we have session. What I mean by session is we have different sessions in the market. So it could be Asian session high and low, it could be Frankfurt high and low, it could be London session high and low, it could be New York session high and low. So all these sections also attract liquidity. Now, what is liquidity? The full video about what is liquidity is going to pop up right now. You can just watch it after you finish watching this video. But I can tell you that liquidity is not a magic. Liquidity is not a magic. It's just other traders stop losses, honestly. Because liquidity is money. When you hear liquidity, liquidity means money. So when you are being liquidated, that means money is gone. Oh my god. Now, you have to identify the liquidity level. So anytime I see structure form like this, the only thing I pay attention to is liquidity level. Liquidity level. During this time, I did not trade any trade here. So I'm going to take us directly to the level where I took a trade. You see, all these things did not concern me. I remember here I marked out a liquidity level, but price did not come to take any liquidity, because if you mark this level here can be liquidity. So this level here can be liquidity. Yeah, and the reason why I marked that as liquidity is because this can be a liquidity for price to bounce from here. We also have equal highs and equal lows as liquidity level, triple highs or triple lows as liquidity levels. Now let us continue, guys. Also, when I'm marking my liquidity, I want to see some levels that will push the liquidity upward, and this is what is called an order block. It's either an order block or you call it a demand or a supply. But now I'm on a bullish market. So in the bullish market, we call it a demand level. When price is coming back, the level price is going to be resting on is going to be called a demand level. Any red candle, any opposite candle, like this red here, any opposite colored candle, let me use that word, any opposite colored candle is going to be your order block, because a bullish market is mostly represented by another color of candle. Only if you decide to paint your own candle, which is very rare. You cannot put your candle, you cannot make your candle to be all green, and you cannot make your candle to be all red. We have some people that will make their bullish candle to be red, and they will make their bearish candle to be green. So we have some people that will make it maybe a black or a white. So that is why I said any opposite colored candle. So now we have this level is going to be an order block or a demand. So I mark any demand that has a fair value gap on it. So when I'm marking my liquidity levels, I'm marking a demand that has an order block on it. So here we can see liquidity level here. This is a liquidity level here, and I'm only marking a liquidity level that has an order block. This is an order block here, and this order block has what we call a fair value gap. We can see a gap. Market is not supposed to have this kind of gap. This is a gap here, because there's supposed to be an interwoven between the candles. So anything that is given a space here is a gap. All these are a gap, but you don't just trade any gap we see. We trade gaps based on liquidity. We have to trade the ones that attract liquidity. So if we come here again, we can see this is a demand or an order block here, and we can say this is a demand and order block, and this is where I took my trade, because I saw this level. This is a liquidity here, and this particular liquidity, when I took it, was a session liquidity. It was a session low liquidity. So we have our demand here. So anytime my liquidity is resting on my order block, I take this place as the reference candle, and sometimes I mark out the fair value gap on it. So now this is where we took our trade. Let's get into the business. So I waited for price to take out this liquidity here. I waited for price to take out that liquidity and come into our zone. So I can call this place my point of interest, and I can call this place my liquidity level. So let's see how price played out. So this level is still going to attract many people, because most of the time before price will take out this liquidity, price is going to attract many people and force them into a wrong direction. We have many people that will have bought around this area, and let's see what price data did to them. So I'm going to jump into 1 minute time frame right now, because this is going to make a lot of sense in 1 minute time frame. So we can see it on 1 minute time frame right now. So remember this structure that I told us about? I want price to take out the liquidity level, then give me a structure 1, 2, break of structure, a retest, and boom. This is the pattern I always wait for. This pattern, it doesn't fail. If price eventually gets to my point of interest, this particular pattern is always my expected pattern. Yeah. So I need price to take out this liquidity level. It will actually deceive people to take a buy. We have liquidity here. We have people that trade support and demand. We have their stop loss resting here. We have the diagonal liquidity. That's another type of liquidity that I didn't mention. We have the diagonal liquidity level. The diagonal liquidity level is a liquidity level that formed like this, higher low, something like this, just forming equal highs and equal lows on the diagonal level. So a diagonal liquidity is going to give you something like this. So a diagonal liquidity is going to give you something like this, and stop loss are going to be resting around here. We are going to be have stop loss resting around here. So a diagonal liquidity will give you something like a slant like this, and this level and this level is going to be liquidity. This can be a diagonal liquidity. This level right here can be classified as a diagonal liquidity. Sometimes you just want to take it all the way down. So this level here is a diagonal liquidity. So I'm going to delete this right now. So when you hear people say diagonal liquidity, some people also call it a trend line liquidity. That is what they refer to. So let's see what price did. You see, this is a liquidity level. You see now, this is liquidity level. This is the type of liquidity we call equal lows. You can see this equal lows, deceiving people to take a buy. Some people will enter a buy right here, and price will eventually take them out of that market, and that is it. Price took them out of the market. So immediately price takes people out of markets like this, I start looking for my entry, because this empty place is also a fair value gap. Fair value gap also attracts markets to take decision. Fair value gap also attracts markets to go to the preferred direction. So if price doesn't go to the preferred direction here, it will go to the preferred direction here. And don't forget the pattern we say we are looking for. We are looking for this particular pattern to form for us. Yeah, so I will delete this pattern right now because, okay, let me just leave it there. So don't forget we want this kind of pattern, and from here we can start searching for a high, a low. But now we can see this is a low, high, and we have a new low here. So this is a structure. So when this structure is broken to the opposite side, that is when I want to take my trade, guys. So we see what happened here. We have a high and a low. This high produced this low. This high produced this low. Our market breaks just around here. Market break just around there. So I'm not waiting for any other thing. Now we can see this candle here. This is a candle that will attract price to buy. That is going to be a candle that will attract price to buy right here. So I will take my trade right there. So I will take my trade right there because I already seen the break of structure. We can see what I was talking about here. A high and a low. This is a structure. Price is coming down. This is the price that was coming down like this. Price coming down, gave a pullback, gave it a new low, gave a new low. This new low break the structure high. The new low broke the structure high. Then what I'm expecting is price to retest. And boom, I take my trade, guys. That is it. Price tap me in immediately. That is how to take trades, guys. And where are we going to? We are going to check the weekly time frame, because so we are going to check the weekly time frame, guys. We are going to check the weekly time frame. So where are we going? We are going to drag it all the way up. Let's go to 15-minute time frame to see possible levels. Okay, this is a level here, but I think there is a level on daily time frame that was even more attractive. But first of all, let's set our levels very well. From here, we have price coming from here, tapped us in from there. Let's check the levels we are aiming at, or we can see we can extend our. Let's check the daily time frame. Right, so guys, this is the level we are targeting. This is the weekly high. This is the weekly high level. If you check it from weekly time frame, this is a weekly high level. I don't want this video to be too long for us. So if you check it right there, price will continue to shoot, and this is going to be 1 to 44 trade. This is going to be 1 to 44 risk to reward trade. Guys, high risk to reward doesn't come from tight stop losses. Honestly, it comes from entering after liquidity has already done its job. Honestly, it's because once you are able to spot out the liquidity level here, then you are able to enter the trade from 1 minute, as I showed us earlier. And when you leave it here, we can see price is going to be doing something, try to trick people to buy or to sell, and boom, that is it. 1 to 44 very fast. We can see that it's faster than how price has been moving before, because that is the exact mission of the price. That is the exact mission. I mean, you can see 1 to 44 easy money. And that is how it is. Once you are able to trade along with the trend, because we established a new trend, once you are able to trade along with the trend, every other thing is going to be easy. See, if this helped you understand liquidity better, let me know in the comment section, especially if you've been caught in stop hunts before. You know, many people have experienced this. When they enter a trade, the trade will take them out, and the trade will go in their expected direction, and at the end of the day they say, oh, it just took me out. No, that is how they want you to think in order for them to take your money. I'm talking about the market maker. So you have to be smart with your trading. Guys. In the next video, I'll show a liquidity setup that failed and why the failure still followed the same logic. So guys, I will end with this. If you learn to track liquidity, the market becomes less emotional and more predictable. And in the next video, I'll show a liquidity setup that failed and why that failure still followed the same logic. This is very sweet, guys. Alright guys, this is your guy Michael, the Selfless Strategic Trader. Leave your comments, let me know if you have gained value from this video, and we'll see you in the next session. Bye.